Louis Vuitton just lost their crown. They're no longer number one. They lost the Game of Thrones. They lost their throne. Oh my God, Bernardo must be so upset. Okay, I literally just bought the stock. More stock. Plus, I just went and bought Louis Vuitton yesterday. Obviously to help boost it. Okay, LVMH dethroned by Hermes as the world's most valuable luxury stock after sales miss. This is a really big deal, you guys. First of all, LVMH constitutes like 20 different brands. And the fact that Hermes as one brand beat them is crazy, first off. But Louis Vuitton stock has been going down steadily for the past couple of years. Shares of LVMH plunged 7.8% on Tuesday after the world's largest luxury group posted an unexpected decline in first quarter sales. I think it was expected, but even their like most conservative numbers, they were lower than that. Sales were overall below the most conservative buyout expectations. So luxury in general has been going down, obviously. And then with this China thing and then with the tariffs thing, it's getting a little bit worse. And I feel like LVMH is hitting the brunt of it, which is crazy because Louis Vuitton is a very well-loved and liked company overall and a well-liked brand. It's very popular and they do make a lot of stuff and they do generate a lot of revenue. But I think the loss in China sales, in Asian sales, and the loss in American sales has helped deter it a lot. Okay, Louis Vuitton store window, blah, blah, blah. Shares of LVMH plunged 7.8% on Tuesday, losing its position as the world's largest luxury firm to rival Hermes after an unexpected decline in first quarter sales. LVMH reported a 3% year-on-year fall in first quarter sales in a trading update published shortly after the market closed on Monday, missing consensus analyst expectations for slight growth. The results pulled down the wider sector in morning deals amid broader market gains. Kering shares declined 5.2%, Burberry fell 4.6%, while Richemont traded 0.9% lower. So everyone's falling except Hermes. Hermes keeps going up. That's why it's a better investment than stocks. Get your Birkins. This is just another example of how a Birkin is a better investment than the stock market, even though we should do both. Diversify your platform. Diversify your portfolio. Also your platform. LVMH shares on course for the worst session since March 2020. A 0.2% increase in the share price of Hermes saw the Birkin bags maker's market capitalization surpass that of LVMH. The afternoon puts LVMH's market capitalization at 244.1 billion euros, $275.4 billion. This decline over the past year, or this is year to date. So it was at 750 at its high, and now it's at 488. And if we look at that compared to its 1 year or 5 year, I feel like it's pretty much gone back to where it was. Okay, so 1 year ago, it was up at high, but it's 5 year. We're trading lower than the 5 year. No, we're trading higher than the 5 year. But still, I bought a lot of this stock at a high, and I'm still stuck with it for a very long time now. But luckily, I also bought a lot of Hermes, and it's gone up. So I think it evens out. LVMH spent several years as Europe's most valuable company starting in 2021 as luxury stocks were buoyed by hopes of a post-COVID-19 pandemic boom. It has lost more 45% of its value since its record was overtaken by Danish drug maker Ozempic, yada, yada, yada. LVMH's wine and spirits saw the sharpest revenue decline in the first quarter, down 9%, which is weird, as it flagged weaker demand in U.S. and China for cognac. Geopolitical tensions. I'm scrolling too fast. The key fashion and leather goods division, which accounted for 78% of profit in 2024, slid 5%. Sales of watches were flat. Good on Bernardo Sano's son that's handling their watches. Japan, China were lower. Not much to cheer at the luxury bellwether with overall difficult. While structural growth drivers remain in place, shorter-term visibility is very limited, especially in light of trade tension and tariffs. The next positive catalyst for LVMH sector would be likely need to come from a macro surprise, as fundamentals will likely remain tough in the short term. Tariff, the luxury sector relying on global supply chains and U.S. consumers' demand, facing headwinds of U.S. volatile trade policy. LVMH, which owns brands including Louis Vuitton, Moet Chandon, and Hennessy, is the first major European luxury firm to report first quarter earnings since Trump announced and then delayed reciprocal tariffs on the global trading partners. As such, investors are eager for an indication of the firm's forward guidance and potential impact of tariffs on input costs and consumer demand. LVMH, analysts told Monday that the group had not seen a major change in trend in the first quarter and that continued to see solid growth in the past 6 months. Its truly aspirational clientele is always more vulnerable in less positive economic cycles and uncertainties, and it might have some impact on... I can't keep scrolling. I'm scrolling faster than I'm reading, unfortunately. Repricing goods offset inflation. They expect to be more sheltered than under realtors because of media high-end labels, typically better able to pass on added costs to wealthy consumers. No, we don't want the cost coming to us. That's crazy, no! Okay, Read the article for yourself. Anyway, I'm going to have to do another one of these videos because I messed this one up. But come back with me later. Okay, bye. This is big news.